Hello, everyone. Thanks for joining us. We are a group of students from our corporate finance class, and today we are putting on our investment advisor's hat to discuss six major companies. Microsoft, a global tech leader known for Windows, Azure Cloud, and enterprise softwares. Apple, consumer tech giant with strong brand loyalty, earns from iPhones, services, and hardware. Adobe is dominant creative software company with Photoshop, Premiere, and expanding AI tools. Coupang, on the other hand, is a South Korean e-commerce platform known for extra-fast delivery and aggressive growth, listed on the US Stock Exchange. Unilever, consumer good, conglomerate with brands like Dove and Ben& Jerry's. Our last company is Toyota, a leading automaker, innovating in hybrid and electric vehicles with global production level. We analyzed each one through a corporate finance lens and looked at their expected return, risk, business model, and governance. Stick around, we will tell you which one we think are worth investing in.
Expected return comparison. So let's kick things off with return because let's be honest, that what most of investors care about first. So Microsoft and Apple lead the pack with annual return is around 21% and 29% respectively. These tech giants have shown consistent growth. And Toyota follow with about 11 and 9% return. It's pretty strong for the any auto market. Abode and Unilever delivery modest return is around 4.5% and 4% respectively, but unfortunately, Coupang has the only one with a negative return in minus 5.2%.
Now, let's look at the risk analysis of our selected companies using three different measures: beta value, squeakiness of return, and excess kurtosis. First, the top left chart shows beta value, which measure its company market risk compared to the overall market. A beta value of 1 means the stock value moves in line with the market. Coupang and Adobe have the highest beta value, around 1.4, meaning they are more volatile and carry higher market risk. Microsoft and Apple are just slightly above 1, indicating moderate market sensitivity. Toyota has beta under 1, around 0.7, which means less volatile than the market. Unilever has the lowest beta under zero point 0.5, suggesting it has the least affected by market fluctuation and is the safest in terms of market exposure. Now, next, the top right chart shows the squeakiness of return, which tell us about the shape of the return distribution. A positive skew means small loss but potential for big positive return. A negative skew suggests the opposite, more downside risk. Here, Coupang shows positive skewness, which may indicate potential for large upside gain. On the other hand, Adobe has a strong negative skewness, around minus zero point 0.8, meaning it has higher chance of large negative return. Toyota, Microsoft, and Apple are close to zero, which shows a more balanced distribution of return. Unilever also has moderately negative skew, so while it seems stable, it could still have some downside risks. Finally, the bottom left chart presents the excess kurtosis of return, which indicate how often extreme value occur. Higher kurtosis means frequent extreme ups and down. Unilever stands out here with an excess kurtosis over 25, showing it has higher chance of extreme return despite being low risk in terms of beta. Coupang and Adobe also have moderately high kurtosis, which support the idea that they are riskier investment. Meanwhile, Toyota, Microsoft, and Apple shows lower kurtosis, meaning more stable and predictable performance. In summary, Coupang and Adobe are high risk, high volatile stock. Microsoft and Apple are balanced with moderate risks. Toyota is a safe and defensive option. Unilever looks low risk from its beta, but its high kurtosis shows potential for unexpected extreme return, which investors should be cautious about.
So let's talk about how the company make the money and measure their costs. Adobe and Microsoft and Apple all benefit from high operation leverage. Once they build a product like software selling more cost very little. Grateful nothing. Toyota and Coupang have a high upfront cost factory and infrastructure, but they scale pretty well too. Analyze is in the fast-moving consumer goods space, so it deals with trial nothing but massive volume. Finally, fascinatingly, most campaign here used that smartly. Toyota and Adobe keep it conservative. Apple and Alive used a bit more lesson, but they got the cash follow to bake it up.
Governance isn't always exciting, but it's matter, especially for long-term investors. Microsoft and Adobe have good board and great transparency. Toyota has made big moves too, separating the CEO and chairman roles and steering up ESG efforts. Apple is solid, but has faced trust issues, especially around the App Store. Coupang has a decent framework, but recent regulatory trouble raises some red flags. Unilever is the ESG poster child. The diversity, sustainability, in stakeholder engagement, their governance is one of their biggest strengths.
So to conclude our analysis, here is our investment recommendation based on return, risk, business model, and governance. First of all, Apple and Microsoft are our strongest recommendations. They combine high returns, strong cash flows, and reliable governance, ideal for investors seeking growth with moderate risks. Also, Toyota is our pick for a balanced investment. It offers decent returns with low volatility and strong financial discipline, especially during the EV transition. Next, Unilever is best for conservative investors. It is stable, low risk, and has excellent ESG, though returns are modest. And lastly, Adobe and Coupang carry higher risk in comparison with other companies, but Adobe has great long-term potential in AI, but short-term volatility is a big concern in that case. Coupang's e-commerce growth is promising, but regulatory and margin pressures make it more risky. In conclusion, for a solid portfolio, we recommend combining Apple, Microsoft, and Toyota, and only adding Adobe or Coupang if you have a higher risk desire.
Even though all of us did our best to come up with a perfect figure and accurate analysis, but this is a quick reality check that no analysis is perfect. Ours is based on historical data from 2021 to 2024, so it doesn't account for any sudden market shocks, leadership changes, or next year's surprises. We also relied on public data like stock returns and financial statement. So, while we did our homework, we always recommend deeper research before making real-life investment decisions. And that's a wrap. We hope this gave you a clearer picture of how to apply corporate finance in the real world. Whether you're a risk taker or safety-first investor, the key is knowing what you are getting into. Thanks for watching and happy investing.